If you are living in the UAE and think that investing is only for rich people, it's not. I'm going to show you how to start with just 100 dirham. No scams, let's go. If you are in Dubai or anywhere in the UAE, working hard, sending money home, or just trying to make your cash work smarter, this video is for you. You don't need a big paycheck and you don't need a finance degree. I'm breaking down the easiest, safest ways to start investing here, even if you just got 100 dirham in your pocket. First, let's talk about the money safety ladder. Think of your money like climbing a ladder. The bottom steps are super safe, like standing on the ground. As you climb higher, you can see more and maybe earn more money too, but the chance to slip and fall gets bigger. Low risk means safer spots at the bottom, like saving accounts and national bonds. They are steady and reliable. Medium risk is the middle of the ladder. Gold and real estate fits there. It's a bit riskier, but it's still solid. And high risk is the top steps. So that's where you have the stocks, or even higher the cryptos. It's exciting, but you can lose money there. You don't have to climb all the way up. Most people mix the bottom and the middle steps. That way, you balance safety and growth. Let's talk about two super safe places for your money. Saving accounts are like your money's home base. You can put cash in, take it out anytime, and earn a tiny bit of interest. But if you want something a bit better, national bonds are a smart step up. They are backed by the UAE government so that your money is very safe. You can start with just 100 dirham, and national bonds pay about 2 to 4% interest a year, a bit more than most saving accounts. Plus, you can take your money out whenever you want, just like on your saving account. And here's how to buy national bond. It's super simple. Just go to the national bond website or download the app, sign up, it's easy and fast, deposit your money. You can start with 100 dirham and that's it. Your money is now working safely for you. So if you want to keep your money safe and grow it a little, start here, either with your bank saving account or the national bond. Next, let's talk about gold. Gold is like the original money. It doesn't make huge profit fast, but it is a safe box that holds its value when other things drop. Here's how you can invest in gold smartly. First, avoid buying gold jewelry for investment because it usually has low purity and extra making charges, which means that you pay more, but you don't get as much value. Instead, buy gold bars or coins from trusted shops. These have higher purity and can be sold later at the international gold rate. That means that you won't get stuck with shopkeepers trying to negotiate the price down easily. Or if you want to skip the hassle of storing gold, use local platforms like Sarwa or Baraka to invest in gold ETFs. These ETFs let you invest in gold digitally without needing to hold physical gold. Use about 10 to 20% of your money for gold investments. The risk level is medium. Gold prices can go up and down, but it won't crash like some other investments. Now let's talk about crowdfunding. Crowdfunding means many people put money together to buy something big that they couldn't afford alone. For example, imagine buying a big pizza with your friends. Everyone owns a slice. SmartCrowd works like that, but for real estate. You can start investing with just 500 dirham and you earn monthly rent from your share of the property. Your part of the property can grow in value over time as well, and you don't own the whole building or the whole property, you just hold a small piece of it. But now your money is locked for 6 to 12 months, so you can't take it out anytime. The risk level is medium. Property prices can go up and down in Dubai and you need to wait before getting your money back. Now let's talk about the stock market. Stocks are tiny pieces of big companies. When you buy a stock, you own a small part of that company. It's like having a small slice of a giant apple pie. Only this apple pie is a company like Apple or Amazon. Sarwa is an easy app to buy a bunch of stocks together called ETFs. Another app called eToro lets you buy stock from the US and even other countries. But here the thing is, don't try to buy and sell stock every day. That's like gambling. Instead, buy an ETF every month for a long period of time, like 5 years or more, because stocks can go up and down a lot. Sometimes you might lose money if you sell too soon, but if you keep your stock for a long period, 10 years or more, you are very likely to make money. For example, a big group of companies in the US called the S&P 500 has made money almost every 10 years period for the past 90 years. So being patient and holding on for the long run is the smart way to invest. The next option is cryptocurrency. Crypto is digital money that you can buy or invest in, but it's not physical like cash or coins. It's stored on computers using something called the blockchain. Think of crypto like a video game token. It has value and people trade it, but its price can jump up and down very fast like a roller coaster. Apps like Binance and Coinbase let you buy popular cryptos like Bitcoin and Ethereum. For example, Bitcoin is the most famous crypto. Over the past 10 years, its price went from less than $1,000 to more than $110,000 as we speak. But during that 10 years period, the price of Bitcoin also went up and down down a lot of time. That's why crypto can be risky. And to keep your crypto safe, many people buy what we call a cold wallet. So it's an offline device that looks like this. It protects your coin from hackers. So if you are new at investing, you may want to familiarize yourself with safer options like gold and stocks. Because crypto is the riskiest investment on the list that we share today, and prices can go fast, but they can crash quickly. On this part, I would really suggest that you only invest that you can afford to lose. If you try crypto, think long term and don't panic when prices jump around. Now that you see the different options, think of your money like making a smoothie. You don't need to put in just bananas. You can add berries, yogurt, peanut butter to make it tasty and healthy. Well, it's the same with investing. You want a mix of different things so that your money stays safe even if one part doesn't do well. Here is an example. 10% of your money can go to the national bonds, 20% can go in gold, 35% in real estate, 30% in stocks, and maybe 5% in Bitcoin or other cryptocurrency. This mix helps protect your money. If one thing drops, the other help to keep you steady. So now, how much should you invest? First thing first, save up an emergency fund. That means enough money to cover 6 months of your basic living costs. Keep this emergency fund in a safe place like a saving account or the national bond so that you can get it quickly if you need it. And once your emergency fund is ready, start investing the extra money you have. You can put it into gold, property, stocks, or other investments that we talked about. And here's a quick rule. Try to save or invest at least 20% of your income every month. For example, if you earn 10,000 dirham per month, save or invest 2,000 dirham. Even small amounts every week at the big over time. Now, is there a minimum to start investing? The good news is that you don't need to be rich to start investing. Here's what you need to get going. For the national bonds, it starts with 100 dirham. Gold, you can buy digital gold from 100 dirham as well, but if you want physical gold bars or coins, the minimum will be a lot higher. For property crowdfunding like SmartCrowd, it starts with 500 dirham. And for stocks, application like Sarwa or eToro lets you buy with as little as 5 dirham. And when it comes to crypto, you can also invest 50 dirham or even less. So seriously, even small amounts can get you started on your investment journey. Now, let's talk about how fast you can get your money back when you need it. If you invest in national bonds, you can cash out anytime. If you invest in gold, especially in digital product, it is easy to sell, so you can also cash out anytime. If you invest in property crowdfunding, it's not so fast. Your money will be locked for at least 6 to 12 months. If you invest in stocks, yes, you can also sell anytime, but don't panic sell if the prices drop. Think long term. And it is important to know which investment lets you access your money quickly and which one keeps your cash locked up for a while. Now, the other question you may have is it halal? The Islamic rules or the Sharia say that you should avoid earning money from things like gambling, interest, or business that do things that are not allowed in Islam. Here is what is halal in this video. National bonds are halal because they are backed by the government and they don't involve interest or gambling. Gold is halal as well. It is real physical wealth and it is allowed in Islam. Gold ETF that can be halal too if they follow the Sharia rules, so check for the certification. Stocks application like Sarwa, they also offer halal ETFs that follow the Islamic rule. And SmartCrowd for the property crowdfunding, they have also Sharia compliant properties that you can invest in. What about crypto? Crypto is a bit tricky. I don't think that there is an official statement on this as of now, so I'm not too sure. Let me know in the comment if you have an idea on this one. Now, what about taxes? In the UAE, there is no income tax, but if you invest in other countries like US stocks, those countries might take a small tax from things like the dividend. So if you invest outside the UAE, it is smart to ask a tax expert to make sure that you understand any taxes that you might pay. And here's my final tip. Investing is not about getting rich fast, it is about getting rich slowly. Don't chase quick money or copy every YouTuber's advice. Be like the turtle, be slow and steady to win the race. And very importantly, keep investing regularly. Every month, your money grows thanks to something called the compound interest. That is your best friend in investing. Smash that like button if this helped you, or share it with a friend who is always broke at the end of the month. And drop a comment that says, I'm starting with X amount, my investment journey. Thank you for watching, and I'll see you next one.